Okay. So, is about to get real. We still have about 20 minutes before they actually start. I want to give plenty of time for people to get in on this gravy train. So I've got the conference call up and ready to play. Do we think it's going to be great news and the stock's going to go way up, or do we think it's going to be bad news and we crash down back to like $3? By the way, let me know if I'm also coming through okay. So this has been my thinking going into this. They announced the actual financial results before the market opened, and they're doing the conference call literally smack dab in the middle of the trading day, right? So either it means nothing, or it's a big show of confidence. One of the two. Yeah, that's pretty good volume for this early in the day, I think. But who knows? Maybe if the news is bad enough, you'll see me log into Schwab and start selling. That's a joke for the record. Yeah, I'm pretty much diamond hands on this. Hmm. Yeah, agreed. Oh, the market cap's under 2 billion right now. It's pretty gross, actually. Earnings are in 10 minutes, dude. That's why I'm on the investor relations page listening to this elevator music waiting for it to start. I mean, yeah, the financial results are already out, but the conference call starts in 10 minutes. Actually, I do kind of like the fact that there was volume and the share price didn't really move that much from the financial results. I think it means most people are waiting to hear what they say on this call. Maybe. Judgment against T-Man. So, like Judicator said, 36 cents, 7 cents higher than estimate. Oh. No, no, so that that would be a little bit of a stretch, I think. Yeah. So that, to my understanding, and my very limited understanding, because really, I have no passion for politics, but um, I think that had to do with inflating estimates for insurance purposes while deflating estimates for tax purposes and stuff like that. Which, as far as I know, Medical Properties Trust doesn't do anything like that. So, yeah. So, being publicly traded, MPW's numbers are audited. They're actually audited by the most prestigious accounting firm in the world. A lot of people don't realize that. Um, and so when it comes to MPW and I guess, the integrity of the numbers that they report, I tend to trust more than distrust because of that fact. Well, and even think about this. How many of MPW's hospitals are even in the state of New York? So even if the state of New York decided to go hog wild or whatever, okay, but they own hospitals in many states and many countries. So that's right. You do have to, I do believe that you probably err on the side of trusting PricewaterhouseCoopers until there's a good reason not to. Out of any accounting firm on the planet, they have the most Fortune 100 clients, which is why they're considered the most prestigious. And they are the ones auditing MPW's books. So if some idiot asshat failed social worker like Fraser John Paring says that there's fraud and that they're cooking the books or whatever, well, I mean, do you trust him, a proven, well, allegedly proven liar according to the federal lawsuit, more than you trust the most prestigious accounting firm literally on the planet Earth? To me, that math is pretty easy, but that's just me. Oh, it's always a party when Donald Duck shows up. Well, the financial results already came out before open. They beat estimates by like 7 cents per share. Is But there is an issue with where on the FFO certain non-cash items can be counted as FFO. So yeah, they're saying the book value is too low. That's interesting. If they're saying that the properties are worth more than what the balance sheet shows, that's well, I'll just say that's bullish. Uh, hmm. Because I've heard it the other way where they might have to take a haircut on the stated value on the balance sheet. That's what. By the way, everyone, if you're watching right now, we've got like 5 minutes before the conference call is supposed to start. Smash the like button to boost this in the algorithm. I want to see if we can get to like, I don't know, 50, at least 50 viewing live. That'd be cool. Mm, no, I think it's 19 billion in assets with about 10 billion in debt. That's the number that I understand to be the case. I mean, if there's another 3 or 4 billion in assets I don't know about, I mean, I guess I'd be happy to learn about that. Yeah, correct. About 8 billion in equity. Although there was supposed to be a write-off of some kind of markdown. So it might have dipped under 8. Don't know about the dividend. Nobody will know until they actually say something on the conference call. That could be. To be honest, I mean, I would be perfectly happy with the dividend cut because that lets them preserve more cash, and cash goes on the balance sheet and gives them a little bit more liquidity to have some better options with what to do as far as debt pay down. I think if they can take care of 2025's debt maturities, well, I think that changes the picture a little bit. 2026 is a really big year actually for debt maturities, but it gives longer for interest rates to get back under control, for things to play out more with Stewart and that kind of thing. All right, we should be. All right. Sorry if the music's going to be loud for a minute. I want to make sure I don't miss the start of the call. should be starting nowish. When they start talking, just let me know if you're not hearing them. I think they're about to get on.
Good day, and welcome to the Medical Properties Trust Incorporated Fourth Quarter 2023 conference call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. And please note that today's presentation will only last 60 minutes. And to ask a question, you may press star then 1 on your touch-tone phone. To withdraw your question, please press star then 2. Please note this event is being recorded. I would now like to turn the conference over to Charles Lambert, Vice President. Please go ahead.
Thank you. Good morning. Welcome to the Medical Properties Trust conference call to discuss our fourth quarter and full year 2023 financial results. With me today are Edward K. Aldag, Jr., Chairman, President, and Chief Executive Officer of the company, Stephen Hamner, Executive Vice President and Chief Financial Officer, Kevin Hanna, Senior Vice President, Controller, and Chief Accounting Officer, and Rosa Hooper, Senior Vice President of Operations and Secretary. Our press release was distributed this morning and furnished on Form 8-K with the Securities and Exchange Commission. If you did not receive a copy, it is available on our website at medicalpropertiestrust.com in the Investor Relations section. Additionally, we're hosting a live webcast of today's call, which you can access in that same section. During the course of this call, we will make projections and certain other statements that may be considered forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. These forward-looking statements are subject to known and unknown risks, uncertainties, and other factors that may cause our financial results and future events to differ materially from those expressed in or underlying such forward-looking statements. We refer you to the company's reports filed with the Securities and Exchange Commission for discussion of the factors that could cause the company's actual results or future events to differ materially from those expressed in this call. The information being provided today is as of this date only, and except as required by the federal securities laws, the company does not undertake a duty to update any such information.
Do you still hear the guy on the conference call? Okay.
During the course of the conference call, we will describe certain non-GAAP financial measures which should be considered in addition to and not in lieu of comparable GAAP financial measures. Please note that in our press release, Medical Properties Trust has reconciled all non-GAAP financial measures to the most directly comparable GAAP measures in accordance with Reg G requirements. You can also refer to our website at medicalpropertiestrust.com for the most directly comparable financial measures and related reconciliations. I will now turn the call over to our Chief Executive Officer, Ed Aldag.
Thank you, Charles, and thanks to all of you for joining us this morning on our fourth quarter 2023 earnings call. I'm pleased to be joined again today by Steve Hamner, Rosa Hooper, and Kevin Hanna. You will hear from each of them shortly. As discussed in detail last quarter, our primary focus right now is executing a capital allocation strategy that will aim to generate at least $2 billion of additional liquidity in 2024 and help us satisfy our debt maturities for several years into the future. Since outlining this new capital allocation approach last year, we have made significant strides, and I'd like to begin today by highlighting that progress. During the fourth quarter, we closed on the sale of our 4 remaining Australian facilities for approximately $305 million, or a 5.7% cap rate. And in our press release earlier this morning, we announced another $480 million of agreed-upon liquidity transactions, including the sale of 5 hospitals to Prime at a 7.4% economic cap rate, as well as the sale of our syndicated term loan investment in Median, the parent company of Priory Group. We believe these recent transactions and other processes we are actively engaged in clearly demonstrate that our assets remain attractive to operators and sophisticated real estate investors around the world. We are actively working on several additional asset sale opportunities, as well as other transactions that we believe will validate underwritten asset values. and the prices we have achieved to date are broadly consistent with initial indications of market value that we've received on these other assets. As such, we remain disciplined and optimistic in our ability to continue to execute transactions on attractive terms, and we feel good about where we stand today relative to our $2 billion target for 2024. The board will meet later this quarter to discuss the dividend. The board's policy on the dividend remains unchanged. As has always been the case, the board will review all aspects of the company, including items such as FFO payout ratios, REIT requirements, and liquidity. Before I turn it over to Rosa, Kevin, and Steve to go through our results in more detail, I wanted to provide a brief update on Steward and Prospect. During our last call in October, we discussed Steward's revenue cycle management challenges, which had resulted in a sizable accounts payable backlog. Unfortunately, since that time, Steward's cash collection challenges have become more pronounced, and the resulting changes to vendor payment terms have put pressure on supplies, constraining Steward's ability to perform higher margin surgeries that are a key driver of cash flow. As a result, in early January, we shared that we had been working with Steward and its advisors to develop an action plan to strengthen their balance sheet, liquidity, accelerate recovery of unpaid rent, and ultimately significantly reduce our exposure to Steward. This plan contemplates a wide range of strategic transactions, including transitioning certain hospitals to new tenants and selling its managed care business called Stewardship. While it will take some time for Steward to execute these steps, we are encouraged by the early progress. As this plan is executed, Steward needs access to liquidity to continue to operate its critical hospital facilities. As we previously disclosed in January, we funded a $60 million bridge loan which provided MPT a second lien on Stewardship's business, subordinate only to Steward's ABL lenders. We also consented to a limited and tapering deferral of rent until the end of June or the completion of the anticipated asset sales. In the fourth quarter, Steward paid approximately 25% of all rent and interest owed to MPT. In our press release this morning, we shared that MPT and certain lenders in the ABL group are negotiating a new bridge facility under which each party would fund an initial $37.5 million to Steward, of which MPT has already funded $20 million. Any additional funding is entirely dependent on Steward's achieving significant milestones towards optimizing the amount and timing of MPT's recoveries. Turning to Prospect. Importantly, in California, Prospect is current on all rent and interest due through January 2024, though they have not yet paid February's rent. Prospect's EBITDARM has improved year over year, driven by increased admission volumes, higher Medi-Cal reimbursement rates, and lower supplies cost. We are encouraged by their most recent December trailing 12-month rent coverage, which was above 1 times. While we do not have a meaningful update to share today on the sale of Prospect's 3 Connecticut hospitals to Yale New Haven, as a reminder, our $2 billion of targeted liquidity transactions does not include this expected transaction or the expected recovery of our investment in PHP Holdings. As detailed in our press release this morning, we have moved Steward and Prospect to cash basis accounting and divided our portfolio into 2 categories. Our hope is that this split will make it easier for investors to track the performance of our stabilized portfolio, which consists of more than $11 billion of assets and is accounted for using the accrual method. As this breakdown demonstrates, the portfolio continues to perform well, reinforcing our conviction in MPT's underlying business model. While hospital operators have spent the past several years navigating challenges ranging from the COVID-19 pandemic to unprecedented labor shortages to insufficient reimbursement rates, and some tenants have suffered more long-term impacts from those headwinds than others, the simple fact remains that there are no more essential services than those provided by acute care hospitals. For more than 20 years, our underwriting approach is centered on these essential, infrastructure-like characteristics and identifying hospitals that are integral to sustaining community health over many years. Given the highly diversified portfolio of assets we've assembled over that period, we are confident in our ability to find competent replacement operators as needed and continue to execute sales that achieve our objectives. I will now turn it over to Rosa to provide an update on the performance of the stabilized portfolio during the fourth quarter. Rosa?
Thank you, Ed. It's great to be able to participate in today's discussion and take you through some of the highlights across our portfolio of critical hospital real estate. Beginning with Europe, broadly speaking, we are encouraged by recent market trends, including increased occupancy rate, growing reimbursement revenue, and the continued normalization of labor costs. As private insurance coverage expands in the UK, Circle Health continues to demonstrate steady financial performance. Circle has seen an increase in orthopedic joint procedures of more than 50% compared to pre-COVID data. Inpatient admissions also remain on an upward trajectory as patients continue to seek high-quality care alternatives to long wait times. In addition to being named Private Hospital Group of the Year by Health Investor UK for the third consecutive year, Circle was also named as an outstanding company to work for by Best Companies in 2023. Let's turn now to Priory, which is the largest independent mental health care provider in the UK by number of beds. Priory delivered EBITDARM coverage of 2.2 times for the quarter and continues to benefit from the rapid growth of behavioral health services in the UK. It is capitalizing on this trend by driving increases to its already high utilization rate, negotiating reimbursement rate increases, and ensuring efficient cost management. As a reminder, Priory is managed by one of MPT's long-term operators, Median, which is based in Germany. Median continues to steadily improve occupancy, although at a slower ramp than originally anticipated following government-imposed COVID restrictions. Negotiated reimbursement rate increases in Germany were above expectations, and a stabilization in energy expenses have allowed Median to achieve its 2023 financial targets. Swiss Medical Network had a highly productive 2023, completing several renovation and expansion projects and executing a handful of smaller-sized acquisitions that will complement their capabilities in existing markets. Earlier this year, Swiss Medical launched the first integrated care organization in Switzerland, providing a first-mover advantage in an untapped market. Additionally, Swiss Medical remains focused on the development of its Genolier Innovation Hub, a state-of-the-art multi-tenant lab, training simulation platform, and office space attached to their flagship acute care hospital,
I've got a lot of opinions
which is expected to accelerate the transfer of innovative clinical solutions from bench to bedside. The Innovation Hub is on track to open in the second half of 2024.
If you want to look like Derek, more plates, more
Shifting to our approximately $5 billion Americas portfolio, we have been pleased to see operators largely maintain hospital volumes while making significant progress in reducing contract labor. Our Colombian hospitals continue to see high demand in their respective communities, and the two Colombian operators have maintained coverage in excess of 1.5 times. Common Spirit, which recently announced that it would take over direct management of our 5 Utah hospitals from Centura Health, continues to deliver strong property-level performance, reporting steady volumes across hospitals during the quarter. Prime delivered another quarter of strong performance with trailing 12-month EBITDARM coverage
Sounds like everybody except
of 2 times after removing the impact of St. Francis, which is no longer reported in our supplemental, given the transaction announced today. Prime has successfully reduced contract labor costs, while inpatient and ER volumes continue to increase year over year across our facilities. As Prime remains focused on efforts to negotiate more favorable payer contracts, we expect to see increased surgical volumes over time. Overall, our Ernest portfolio continues to deliver steady performance. While its long-term acute care hospitals continue to navigate the impacts of admission criteria waivers that were eliminated in the first half of 2023, Ernest's rehab business has offset any declines associated with that. In fact, when examining the IRF portfolio exclusive of ramp-up costs associated with their new developments, same-store IRFs achieved approximately 3 times EBITDARM coverage.
It's like skipping your rear
Volumes at our LifePoint hospitals remain relatively flat on a year-over-year basis. LifePoint has made significant strides in reducing contract labor by nearly half as they execute on their recruiting and retention initiatives, particularly on the physician recruitment side, which, over time, we expect will result in improved volumes and revenue. This is particularly true at their Conemaugh Memorial Hospital in Pennsylvania, where any underperformance has an outsized impact on coverages for this portfolio. Conemaugh recently dedicated a new, self-funded $77 million cardiovascular and surgical care pavilion that will provide state-of-the-art care for patients.
These days.
The vast majority of LifePoint's investment, over $60 million, went into the real estate, while the remaining portion went towards new cutting-edge equipment. The new leadership for this market is excited about the positive clinical impact this will have for their patients.
I'm wearing the Rich Piana
and combining this with their physician recruitment successes, we believe this market is well positioned for improved performance. Our LifePoint behavioral facilities continue to benefit from increased revenue resulting from increased inpatient volume. LifePoint Behavioral's ability to manage labor costs in a rising wage environment has further enabled them to maintain strong performance. We continue to make progress on the construction of our new LifePoint Behavioral facility in McKinney, Texas, along with multiple other expansion projects at our hospitals in Texas and Kansas. Scion Health has produced consistent quarter-over-quarter coverage improvements in the past year by growing revenue while reducing contract labor. Scion Health's general acute hospitals have seen an 11% increase in year-to-date revenue over prior year, driven by increases in both admissions and surgeries. We are pleased with our portfolio's Q3 2023 performance compared to that of public reporting hospitals. Excluding Steward, for trailing 12-month Q3 2023, MPT's portfolio of acute care hospitals reported volume increases that were, for the most part, higher than that of the public reporting companies, and income statement growth metrics that were generally in line with those of the public reporters. Over the years, MPT has carefully constructed a well-diversified portfolio in terms of care settings, operators, and geographies. We have over 50 unique tenants operating across the highest acuity care settings, including rehabilitation, behavioral, and acute care hospitals. After Steward, our second largest operator, Circle Health, represents 12% of our portfolio, followed by Priory at 8% and Prospect at 6%. Geographically, our properties are spread across 9 countries, with nearly 40% outside the United States. Importantly, this deliberate diversification strategy helps safeguard against any operator-specific challenges that may arise, as well as geopolitical and economic disruption. With that, I will turn the call over to Kevin to discuss our financial results. Kevin?
Is the stock even really moving?
This morning, we reported a GAAP net loss
of
$1.11 per share and normalized FFO of a positive 36 cents per share for the fourth quarter of 23. As Ed mentioned, and described in the press release this morning, we have moved Steward to cash basis accounting effective January 1st, 2024. We want to highlight that included in fourth quarter normalized FFO is approximately 12 cents per share of Steward quarterly revenue recognized prior to this accounting change. In the press release, we also detailed approximately $770 million of charges recorded this quarter, primarily related to Steward. Importantly, these charges were recorded pursuant to U.S. GAAP accounting rules and reflect conservative assumptions regarding potential recoveries.
These charges consisted of the following: $154 million of rent reserves and $224 million of straight-line rent reserves, $81 million of reserves on unpaid PIK and other interest receivables related to Steward loans and a loan to our international joint venture, $112 million of real estate impairments. With the assistance of a third-party independent appraiser, we analyzed all Steward properties and many others for possible impairment this quarter and identified less than 10 properties where our net book value exceeded the estimated fair value, and we adjusted our books accordingly. We also had $171 million of non-real estate impairments, which again, using a third-party independent appraiser, we adjusted our non-real estate investments in Steward to reflect the current estimated fair value of our related collateral. Finally, we made a $30 million charge in earnings from equity interest to reflect the reserves for build and straight-line rent on the properties included in the Massachusetts joint venture. These charges were recorded on several different line items of our income statement, and we have included additional tables in our release this morning showcasing the impact of these charges.
That the board
beyond impairment charges, we did have two other adjustments to normalize FFO that I want to highlight.
So they didn't
As is typical,
confirm
we recognized fair
the
value
dividend,
adjustments
but
in the
also
quarter
didn't
from
say
adjusting certain
it's going
marketable
away.
securities, like our Swiss investment in EVIS, to market. This $8.4 million negative adjustment is net of a gain
soft confirm
recognized on our PHP investment, as the managed care business continues to perform well. Second, and due to Steward and the significant adjustments made this quarter, we recorded a $6.6 million cumulative adjustment to stock compensation expense to reflect our updated estimate of expected payouts for certain stock award grants over the past years. And with that, I will turn it over to Steve for a discussion of our liquidity position and plans. Steve.
Thank you, Kevin. I will wrap up our prepared remarks with some perspective around our near-term recapitalization process that Ed mentioned at the start of the call. On last quarter's call, we described our plans for accessing capital through asset sales and limited secured financing. We announced an initial target of about $2 billion over the course of 2024. This morning, we announced that we have so far agreed to transactions aggregating almost 25% of that initial target. The largest of these transactions is our agreement to sell 2 hospitals to Prime for $350 million. Importantly and encouragingly, the economics of the transaction imply a capitalization rate of about 7.4%. That is obviously much better than what our share price implies, or even what some investors believe our secured financing rate would be. Moreover, we expect to realize an approximate $50 million GAAP gain on the transaction, and the purchase price exceeds our undepreciated initial investment by about $30 million. We expect to receive $250 million of the purchase price in cash upon expiration of a short notice period, and the remaining $100 million before or on the expiration of a 9-month interest-bearing mortgage note due to MPT. In addition, we were able to consolidate our 4 remaining hospitals leased to Prime under a new 20-year master lease with a lease base of $238 million. Notably, the original master lease in place for 3 of these hospitals was otherwise set to expire next year. In addition to the benefit of extending the term of this lease, our relative rent will increase by approximately $5 million. So, the economic 7.4% cap rate is based on the $350 million purchase price and $26 million of net rent. That is the $31 million of contractual rent on the 2 hospitals we sold, offset by the $5 million rent increase that results from the increased lease base added to the new master lease. The new lease also provides Prime an option to purchase these facilities at any time for $260 million, which would represent an additional gain on sale of real estate of approximately $95 million for MPT over and above the $50 million gain I just mentioned. These are all attractive hospitals, and in our view, Dr. Prem Reddy and his management team are amongst the most reliable and capable operators of acute hospitals in the country. But the geographic location of these hospitals are not necessarily the best in our portfolio, and yet they traded at a 7.4% economic capitalization rate. This speaks very strongly of continued investor interest and confidence in well underwritten hospitals that are necessary to a community's overall healthcare infrastructure. We have proven that repeatedly over the past couple of years, and Prime is just the most recent example.
Seems like they're doing
Other
pretty
recent
well.
Transactions that have validated the value of our assets include, but are certainly not limited to, the sale of our Australian portfolio in October of last year at an indicated capitalization rate of less than 6%. The new lease put in place with Common Spirit in Utah roughly 1 year ago, which effectively placed a mid-7% cap rate on the rental stream. Other recent hospital sales to Prime for $460 million, which generated very attractive IRRs and fully recovered our initial investment from at least 10 years earlier. All these transactions and more have been executed in global economic and financial markets that have not necessarily been friendly to sellers of large operating facilities. And that is why we're encouraged by the progress we're making and our potential path to exceeding our initial $2 billion target, which, as a reminder, does not account for any proceeds from a sale of our Connecticut assets to Yale, any monetization of our interest in Prospect's PHP managed care business,
the board would meet about
or any possible proceeds from resolution of the previously mentioned so-called non-top 10 operator that we discussed on last quarter's call. Although we are not prepared to announce specifics this morning, the valuation metrics of potential transactions that are currently subject to letters of intent and in-process definitive documentation are, adjusted for geography, size, and tenant characteristics, highly comparable to these recent transactions, and in particular, the Prime transaction.
We haven't heard any analyst
questions. As we realize capital from these transactions, we expect to immediately reduce our debt maturities. In 2024, we have only two maturing loans, approximately $300 million in May and $130 million in December. In the interim, we will reduce our revolver balances, which in recent months have carried an interest rate of around 6.9% for the U.S. dollar borrowings. In 2025, we will have roughly $900 million in bank debt and $550 million in unsecured notes maturing. And as just noted, we expect our planned sales and secured financing transactions will provide more than sufficient proceeds to satisfy these maturities. And with that, we have time for a few questions, and I'll turn the call back over to the operator.
Thank you. We'll now begin the question and answer session. To ask a question, you may press star then one on your touch-tone phone. If you're using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star then two. In the interest of time, please limit yourself to one question.
Like they had like 3 or 4 different.
At this time, we'll pause momentarily to assemble our roster. Our first question comes from Austin Wurschmidt from KeyBanc Capital Markets. Please go ahead.
Great, thanks, and good afternoon. On Steward, one, have they paid you the partial rent payment that you agreed upon earlier this year for February? And second, I guess just given the additional capital that you and other ABL lenders have agreed to fund, how much confidence do you have in the ramp in cash rent payments, in the coming months that you laid out earlier this year?
So Steward is compliant with our previous agreement for ramping up the rent, and we expect that they will remain compliant through June when that ramp gets all the way back to 100%.
Got it. And then just as far as on the $2 billion of liquidity, I believe 40% of that amount was expected to be through, loans or secured debt, I think more specifically. I mean, how far along are you in negotiations on that front? Any sense when you could close? And I guess what are you hearing around, terms for any such proceeds?
So to clarify, I'm not sure. I don't remember, in fact, saying that 40% would be secured debt. I think all we said is there'll be limited secured debt. We're not in a position this morning to give the details, but I did mention, by the way, that a significant amount of the remaining $2 billion is under either LOI or being negotiated through definitive documents. And Further, we tried to mention that the pricing that you saw, not only with the most recent prime transaction, but with transactions last year, is generally consistent with the valuation metrics, and that means pricing or interest rates that we're seeing in those transactions that are in progress.
Understood. I'll hop back in the queue. Thank you.
The next question comes from Joshua Dennerlein from Bank of America. Please go ahead.
Yeah, hey guys, thanks for the time. I guess just maybe a follow-up on that. What kind of gives you the confidence that Stewart will be able to ramp up and start paying full rent starting in June?
So it's driven by two key strategies that we mentioned early last month. One of those is the aggressive efforts at repositioning, re-tenanting, or otherwise selling facilities that are now occupied and operated by Stewart. Secondly, it's dependent upon a satisfactory monetization of its own stewardship managed care business.
And Josh, in addition to that, we've been getting weekly cash flow reports from Stewart's advisors, to which they've exceeded every one of them thus far.
Okay, and maybe a follow-up to that answer, just how easy is it to re-tenant a facility, and how do you guys think about just like the transition period if you were to re-tenant a Stewart property?
So the answer to that varies from state. Some states it's really easy, can be done overnight. Some states take a little bit longer. The real answer to that question, I think, for us, is that we've been extremely pleased with the amount of interest we've gotten in almost all of the facilities, and in almost all of the facilities, we've got more than one party who is interested in the facilities.
Okay. Thanks, guys.
The next question comes from Michael Carroll from RBC. Please go ahead.
Yep, thanks. I wanted to circle back on the Stewart Bridge loan. I just want to get this straight. So MPW has already funded an additional $20 million, but the other certain ABL lender that was going to match that, they haven't yet provided those funds?
That transaction is not closed yet.
And then what are you waiting for on that? I guess what milestones need to be achieved for that money to be paid out, and what other milestones need to be achieved for you to pay out the other $17.5 million that you agreed to do?
Well, so those milestones have been reached. So in other words, the $37.5 million each that MPT and the ABL lenders are expected to fund, those milestones have been reached. And in order to fund anything further than that, then additional milestones, which are directly related to those two key strategies that I just mentioned, re-tenanting and selling the non-core stewardship assets. There are some very specific, relatively stringent milestones that have to be met in order to fund anything else. But again, just to clarify, the first $37.5 million apiece,
again,
of which we have funded 20,
about the dividend today.
is expected to close soon, depending on having already met the early milestones.
No, they
so
mentioned
why hasn't the other ABL lender provided their initial funding yet?
The documentation is not complete.
Okay. And then just if I can squeeze one more in there, I guess for the potential buyers of these Stewart assets, is there concerns of fraudulent conveyance at all related to them potentially selling off parts of their business? And do those buyers have that concern?
I wouldn't know how to answer that for any particular buyer, but clearly Stewart is in a distressed situation, and there are multiple advisors, including legal advisors, and no transaction would happen, under any type of fraudulent conveyance. So that one of the keys to our underwriting over the years has been, we own hospitals that nobody wants to see closed, and so there's a great deal of cooperation, particularly in some of the eastern states that typically have heavier regulatory hand, for the regulators, for the state, for others to help facilitate these transactions. So I don't think there's going to be an issue with fraudulent conveyance.
And Mike, obviously we've done this before, and there are plenty of advisors working on these transactions.
Okay, thank you.
The next question comes from Mike Moeller from JP Morgan. Please go ahead.
Yeah, hi. For the 350 of prime sales, I guess why isn't looking at the 8.8 cap rate just on, that rent stream going away the right way to look at it versus netting the rent escalator in there? And then just, on top of that, are the transactions you're looking at going forward, the economics are more similar to that net number in the sevens or the standalone number in the high eights?
So the first answer to that question is that very simple, it was all done in one transaction. The second part of that question is that, yes, they are more similar to the number that we quoted.
Okay, thank you.
The next question comes from Vikram Malhotra from Mizuho. Please go ahead.
Morning, thanks. Just maybe first one, I wanted to understand maybe if you can give a little bit more color on the $2 billion of plan, sales. You mentioned there's a bunch on LOIs as well. I'm just trying to understand, can you give us a flavor of what types of buyers these are, timing-wise? Let's just say things get delayed. Is there a plan B in terms of addressing the debt coming due?
Well, we've addressed the debt all the way through this year, and significantly we expect 2025 also. And you broke up a little bit, Vikram, but I think the question was
that's correct.
What type of buyers and timing?
The board has not yet.
And from the beginning, going back to last October, we said this was a 3 to 4 quarter transition, and so in the first of those 3 to 4 quarters, we've done 25%. That's not to predict that the next transactions will be done as rapidly, but again, just to reiterate, we do have a significant amount of the $2 billion under LOI. We're actively negotiating with highly capable counterparties, and we're encouraged by the terms that we've negotiated, which again are very consistent with what you saw with the prime transaction.
And Vikram, to answer the rest of the question, everything that Steve mentioned that we're working on actively, either in the LOI stage or definitive documents, all have backups with them.
Okay. And then just sort of clarify on Steward, I think you said on the call, correct me, but last payment was, I think, 25% of the contractual rent. But what about the prior period where they've made partial payments? Like, just maybe back up and give us a sense of what's the backlog so far, or is it just that they've been delayed on those months and that's all going to be paid when things get resolved? And just related to that, are you, given your comments on full payment, are you linking that to sort of, and there must be a link, but I'm just trying to bridge that between where you see the dividend going, because it feels like at this point, the proceeds from the dividend or not paying the dividend would probably be beneficial. So I'm just trying to think about what have they actually paid and what's the backlog.
Well, Vikram, I'll start with the end part of that question. And the dividend is not dependent on Steward's rent. It's more dependent on our ability to close some of these liquidity transactions.
And again, if I heard the question correctly, about 25% of the rent that Steward owes on 2 master leases. One is the Massachusetts joint venture, and the other is everything else. In total, about 25% of that was paid in the fourth quarter. I think that was your question.
Okay, because if I remember correctly, the shortfall started. Was it in October, or was it prior to October?
Yes. It was in October. All rent was 100% paid as of the end of the third quarter, and any rent that is not paid was October and thereafter.
Yeah, okay, got it. Okay, thank you.
The next question comes from Connor Siversky from Wells Fargo. Please go ahead.
Hi, thank you for the time. In the context of some
He's
of
working
the
with Viceroy
related to Steward that were outlined today in the press release, has your equity stake in Steward already been written down, or any of the loans that have been provided to Steward, have those already been written down, or are those still sitting at full value?
Hey, Connor, yes, they have been written down. I mean, we look at it on a combined basis, the operator loans as well as the equity, and we wrote down in combination around $90 million for those non-operator investments, we'll call it. Non-real estate.
Does that include the loans?
Yes, that would, a combination. Again, we look at them together. So it's a $90 million reduction for all to combine.
Okay, thank you. And then in the press release, in the comments, it outlines $5 billion worth of assets that are in the cash accounting pool. And then in the detail, it states $4.6 billion. I'm wondering if Steward and Prospect are the only operators currently in subject to cash accounting, or is there anything else in there?
Yeah, we have three, I would call them small operators. They represent about less than 1.5% of our total assets that we've been accounting for them on a cash basis. One's been there probably since day one, just very small.
Okay, thank you.
The next question comes from John Pawlowski from Green Street. Please go ahead.
Thanks. Good morning. Could you provide some more details on just domestic operator number one with 0.3 times coverage? What's going on that operator, and do you expect to give financial support to that operator through loans, rent abatements, rent deferrals?
Well, the first answer to the last part of that question is no, we have not.
And John, we have confidence in this operator in this particular market, which we're not going to disclose the particular operator, but we do expect to see turnaround over the course of 2024.
And that particular operator just made significant investments in new facilities at that particular place that Rose is referring to.
Okay. And so you don't expect to give any financial support this year to that operator?
No, it will not be needed.
Appreciate it. Last question from me. Steve, can you give us a sense for the average general acute care hospital in your portfolio right now, what type of secured financing you'd be able to get on those assets in terms of LTV, rate? Any details would be appreciated.
So we expect to be able to announce that. We hope relatively soon with respect to at least one of the transactions that we've been referring to that is a secured financing transaction that's included in those that are referred to as being under LOI and definitive document negotiation. But we'll wait until we have something definitive to announce.
Okay. Thank you.
The next question comes from Tayo Okusanya from Deutsche Bank. Please go ahead.
Yes, good afternoon, and thank you for the time. In regards to the upcoming, asset sales or the secured financing, could you just walk us through how your unsecured, the syndicators of your line of credit in particular, how they have to get involved in this in any way? I'm assuming just given there's a large balance on the line of credit, they're kind of looking at all this movement, and what kind of conversations do you have to have with them to make sure they're comfortable with everything that's going on?
So as we tried to walk you through a few minutes ago, as we complete these transactions, we will pay down the pending maturities, starting with the $300 million in May, and excess until the next maturity will absolutely go to the bank group, to the revolver. So obviously the bank lenders are very satisfied to see that.
Gotcha. Okay. Thank you.
The next question is a follow-up from Michael Carroll from RBC. Please go ahead.
Yeah, thanks. How tight are your financial covenants right now? And then how confident are you that you have the full access to your line of credit?
Fully confident. We have significant headroom in our own financial covenants, either with the bank group or with the unsecured bond indentures.
And then, Steve, what is the covenant that's the tightest? I don't know if you can provide any color on where it is today. Is it the interest coverage ratio? Is that the one that we should be looking at, and where is it at versus where it needs to be?
Yeah, that's not a schedule we normally publish, but we have significant headroom in all of the covenants. The one you mentioned is certainly not an issue.
Okay.
None of them are issues for that matter.
Okay, and then last one for me, Steve, is what is the assumed cap rate on the prime purchase options on that remaining portfolio? So if they exercise those purchase options, I guess what would the cap rate be on those sales?
I'd have to come back to you on that. I don't have that right in front of me, but what I would point you to is if they exercise that option, it would be a $268 million. I'm sorry, $260 million, and that includes. Or let me put it this way, that's the lease base on those assets is now $238 million. And that $238 actually includes, I'm not sure we disclosed this, but I will, $45 million in additional lease base that as part of this, as Ed called it, a comprehensive unified transaction, was added to this new master lease. So all of that's kind of a long-winded way of saying the $260 million purchase price will represent almost a $100 million gain on those assets. So I'm happy to come back to you on a cap rate basis, but I think that's very, very indicative.
Okay, and then that $100 million.
The point in disclosing all that, again, is just to show the interest and the valuation that the market puts on these assets.
Okay, great. And then that $100 million gain, you quote, that's the depreciated book gain, and the other number you gave us was the gross book value of the assets.
That's right.
Okay, thank you.
The next question is a follow-up from Tayo Okusanya from Deutsche Bank. Please go ahead.
Yes, thank you again. Just a quick one. I'm not sure if you talked about this, and I apologize if you did, but the LTAC rent coverage going down to 1.1 with the most recent reporting versus 1.4 the reporting before 1.19 a year ago. Is that all earnest, or is there something else going on there that you could talk about a little bit?
Yeah, no, we've talked about this for the last few quarters. The reason for the decline in the LTACs is that the waivers that everybody had during COVID have obviously all gone away. We only own 15 LTACs remaining. All of the LTACs have a parent guarantee or either cross-defaulted with IRFs that cover obviously much higher facilities. Of those 15 facilities, more than half of them are covering it more than 1.5 times.
Great. Thank you, Ed.
There are no more questions in the queue. This concludes our question and answer session. I would like to turn the conference back over to Ed Aldag for any closing remarks.
Jason, thank you very much, and thank all of you for listening in today. If you have any follow-up questions, please don't hesitate to contact Drew or Tim. Thank you very much.
Conference has now concluded. Thank you for attending today's presentation. You may now disconnect.
So, that was something, huh? Surprisingly, it didn't seem like I was kind of expecting more price fluctuation throughout the call. I was looking and literally not a whole lot was happening with the share price. But yeah, it seems like maybe with Steward, they've kind of got a more defined, I guess, endpoint on the, we'll call it unconditional support. Now any further support comes with strict conditions, which probably should have been the case a long time ago, but they think they'll be back to full payment by June. And I don't know if you guys caught this, but they said any amount that Steward was behind was all from October onwards. So, guess that's interesting. So I guess like there was good reason to think that maybe things weren't going too bad with them, but what are you gonna do? I mean, their CEO has a yacht, so clearly there's fraud, and I'm being sarcastic. Agreed. Saint Aldag is he's a warrior of virtue, we'll just say. And the shorts like Rob Simone and Fraser Paring, they're demons. Exactly. He vanquishes them. Like the chaotic, evil sons of bitches they are. Yeah, so it's weird because we barely heard about Steward last year. And I guess like they didn't start having problems paying rent again until like towards the end. Yeah, yeah, it's definitely it's not riveting stuff. It certainly is not filled with excitement or anything like that. Yeah, you're welcome. Usually I would just like turn it on in the background while I do other things because it's like watching paint dry, to be perfectly honest with you. That's true. They didn't say AI. Bearish. Hospitals are going to zero because they don't do enough AI. AI. Say AI for the algorithm, guys. AI. Chat GPT. What do you mean sell shares to pay dividends? Because they haven't been issuing shares at all. So now IEP, that one definitely looks like they issue shares to pay dividends. If you look at the ticker IEP and look at the financials, I did a video on them a while back. Like I when I look at their numbers, like I don't get how they're paying a dividend without issuing shares, because they issue about the number of shares they would need to issue to raise the money to pay the existing shareholders. It's really weird. Yeah, Carl Icahn would never. But then everybody always comes back with, well, Carl Icahn owns 80% of the company or whatever, and it's like, okay, but I still don't see how that is really relevant to like what the financials show. Yeah. Versus, MPW, the last time they were issuing shares, they were trading at normal valuations and just doing it to raise money for, acquisitions and stuff. Like that's a normal thing for a REIT to do when they're trading at a normal price. They can do debt or they can do equity. And most do some combination. Because they can't retain earnings the same way that a regular corporation can. Otherwise, they lose REIT tax status. Any taxable earnings that they make, they have to distribute 90% of it to shareholders. That doesn't leave them much to fund growth. So equity or debt are the only ways REITs can really grow. So, Adam, for about the fourth time here, nobody knows 100% yet about the dividend. The board has not met and declared the dividend or done anything with the dividend yet. They did say, and I will quote them, the policy remains unchanged. I don't know what that means exactly. That's a very, it seems like they're like, it sounded contextually like a soft confirmation of the dividend, but they probably didn't want to commit before the board actually meets. And, for the record, if you're in this for the dividend, you bought the stock for the wrong reason. So, with regards to Steward, basically they've worked out some kind of a thing where themselves and the other lenders that Steward relies on are going to start tying any additional support to Steward making progress on certain objectives, and there's not going to be unconditional just money flowing to Steward anymore. You're good. I just yeah. Just keep in mind that this is more of an asset play than a dividend play. Obviously, if a yield is this high, well, there's a chance that it's not that the market views the dividend as unsustainable. Otherwise, there wouldn't be this much of a sell-off. Because a 20% free yield, it's like a free lunch. It doesn't exist, right? So there's always going to be a chance of a dividend cut when something gets this wonky, or at least the market is pricing in the chance. If there's an actual disconnect, maybe the dividend's fine. But both things can be true. The dividend could be cut, but there's still also potentially a value disconnect. The big thing that I think people should be focusing on more is the favorable terms for any assets that they sell to settle future debt maturities. It seems like they're getting good prices on a lot of the assets that they're, teeing up to sell. Donald Duck, stranger things have happened. It could go to $23 by 2027. I 100% agree it's better than Tesla. There is quite a lot of upside here. Now, if things go well with Steward over the next few months, I don't know what really the short sellers can actually say at that point. Now, if things go badly with Steward, that would suck, but I don't think that would necessarily be catastrophic for MPW. They indicated that they could re-tenant some facilities and that there were multiple interested parties, we'll say. Yeah, I kind of agree with that, right? like buying a call with no expiration. I actually bought a few calls over the last, I don't know, week or two. In fact, funny thing, some of them expire in July, and June is when Steward's supposed to be paying full rent again. So yeah, I saw the DFS Capital One deal. So yeah, I definitely should have gone in heavy in the 80s when I was covering the stock and telling people it was a good value. And that's true. The U.S. population is aging. Need for hospital beds will grow over time as the population ages. More medical problems will come up. Nobody likes a bragger, Peachy. I mean, I feel good in that I think I was pretty definitive that it was probably a strong value. So like I remain pretty confident that I have a good eye for value. Although when it comes to Meta, I wish I had honestly, like, instead of selling puts, I should have just bought shares and calls. I would have made like $500,000 if I had really gone hard with what I knew was the right thing. But whoops. Yeah. Honestly, I expected it to stay down for a lot longer than it did. That opportunity didn't last very long. Yeah, I mean, I don't know. Meta might still be okay at this price, but I don't know. Doesn't excite me. Really, really, really steep discounts that are obvious to me excite me. I mean, I already have a pretty good amount of MPW. Celsius, yet another beverage brand. Whoop-de-doo. Like, what's the, like, I guess I don't get what the big deal is about Celsius. Crocs. No, I wouldn't say Crocs has a moat. But yeah, Discover, in case anybody wonders, I was covering the stock a lot right in this area on the channel. Oh, is it really Donald Duck? Oh, shit. It is going up. All right, cool. All right, time to load the boat, guys. We're going to the moon. But yeah, like, honestly, I thought pretty much all through here, like, whether it was 90 or 80, I thought DFS was really attractively priced. Really ought to have pulled the trigger, but you know, I would say at the time I was also like really looking a lot at PayPal, and I was thinking I ended up with 100 shares of PayPal, didn't end up with any DFS. So, yeah. Yeah, I've heard MPW isn't allowed, or rather PayPal's not allowed to go up ever. Um, yeah, we're up 5% today. I mean, the fact that, now, like 10 minutes after the call concluded, the stock is starting to go up. I think that people had some time to think think over what was happening on the call and start placing some orders, I guess. I don't know. Yeah. Um, so I hesitate to say that I hate technical analysis, but I'm not comfortable getting into something just because some chart says that it's due to go up because of some random pattern or something. Humans have this proclivity towards seeking out patterns. Our brains are basically pattern recognition machines. And that's why we like see faces everywhere. Or, like, the man on the moon, or that that geological thing on Mars that people say looks like a face and they thought it was aliens or something. Like, those things only look like faces to us because our brains try to like find patterns and order in things where there's randomness. And I think a lot of what people think is like a good technical analysis process is just drawing lines on a chart because you think you see a pattern, and the truth is that a lot of it's just randomness that you're making look like something. I see angel wings in the tile when I go to the bathroom. They're St. Alex. Yep. I think with creating any pattern, works until it doesn't, right? Ryan always coming through with the really awesome guests on our live show. By the way, if you haven't already and you're watching this live right now, you need to follow my Twitter. And you need to watch the actual live show. Every Saturday, 8 p.m. You could be doing some things like you could be smoking, vaping, drinking Bud Light, and turning trans, or doing drugs, seeking out ladies of the night, but there's only one place I want to be every Saturday at 8 p.m., and that's the Cashflow Kings Live YouTube channel. You understand? Because that's the home of real men's investing. Yeah, I'm the CEO of Falling Knife Method of Investing. also known as the cigar butt method. Yeah, that was kind of random. Hope I don't get canceled for that. Cigar butt falling knives method of investing. Yeah. Manolette. Sounds too much like manlet, bro. Go live for NVIDIA. Ugh. To be honest with you guys, I don't have time to go live for like all these earnings conference calls. Like I have like an actual full-time job outside of this and stuff. Peachy, my chat is full of a bunch of alpha chads, okay? They're all about 3D delts, shooting cans of Bud Light like Kid Rock. I almost said Chris Rock. It's Kid Rock. All right. We don't have any low T soy boys in this chat. No, I mean, not naturally. They'll use steroids if they need to. Whatever it takes. I'm wearing the Rich Piana tank top. God damn it. I mean, I don't know if I'd say I have a life. I mean, only DD is low T. I mean, low T is no laughing matter, my friend. You know, I was expecting a much more dramatic situation with the stock price today. I'm a little bit disappointed that it like didn't either like rocket up 50% or crash a bunch. It just feels such a meh thing that happened here. So these guys at estimating $14 a share, I think they're pretty in line with what I think the actual value is. Like if you just look at like book value, that's pretty much the price. They didn't do much on Stewart. I mean, yeah, the thing is, I think maybe it was smart for them to do the Stewart update in January so that any like negativity about Stewart would already kind of be priced in. And so maybe that's why there wasn't really a sell-off today. But yeah, Stewart being expected to not really be able to pay full rent until June. And that's kind of rough, to be honest. And the fact that they're giving, more support to Stewart too, like, eh. So, buddy, I've actually done 2 videos about the lawsuit against Viceroy. You clearly need to subscribe to the channel because you're a little behind. Steward also used to be owned by a private equity firm called Cerberus, and very likely they extracted literally as much money as they could before offloading it. Well, it is definitely bad if, for example, like Steward has a bunch of struggling hospitals in Massachusetts. Um, at least a couple of them are owned by MPW, and if those hospitals closed, it would be a giant problem for a lot of people. Yeah, I don't love all the entanglement with Steward, don't get me wrong, but when people bring up MPW and private jets or Steward and the CEO's yacht, it's like that has dick all to do with any of like the financial performance of the companies in the last year or so, where that's when the share price has been beaten up. So, Peachy, that I don't think that's exactly what they said about East Coast regulatory environment. I think it was more that the East Coast regulatory environment maybe made it a little bit more challenging to change operators, because the context of that comment about East Coast regulations was answering a question about how quickly they can swap out, an old operator, like if they want to kick a tenant out and replace them, like what that transition looks like. Speaking of Bud Light, and they the answer was that in the East Coast, with like the heavier regulations, that could take longer than in other places where it could be overnight. I know. I'm freaking terrible. So I tend to think that the CEO having a yacht and like that being brought up as some kind of like gotcha about any of this, it's a red herring. It's something where people are just saying, "Oh, look at that, look at that." If you ask them the what the what the negative thing is that of why you should avoid this stock or whatever. Well, the CEO of Steward has a yacht. Okay. And they can't link other than, well, his compensation is bloated and while his company is struggling. It's like, I mean, you could make that argument about almost any CEO. So, yeah, like if okay, let's say Ralph De La Tour sold his yacht for I've heard 40 million is what it's supposed to be worth. Okay, what would he be able to pay? Like 2 weeks worth of all of Steward's rent with that or something? Like that's why I think it's just ridiculous. I mean, you know me, I like a good gloat, a good victory lap. as it were. So I think what Viceroy did is they said a bunch of things on social media and like used hashtag fraud, and they made some kind of some kind of claims about round tripping rent and things like that, or whatever. And I guess there's like a very specific, like there is such a thing as like illegal round tripping of revenue, I think. And there's a very specific definition for what constitutes that. And it's in the lawsuit, by the way. And MPW's management contends that, even though their transactions and entanglements with Steward are, really complicated and whatever, that technically that isn't the case. So, So as far as Viceroy, yeah, like, by the way, it's the guy, as far as I can tell, it's the guy in the middle of my thumbnail. The guy on the left is Aldag, and the right is of course me. So basically, my vision is that Ed Aldag and I, we do sort of like an Undertaker Kane style tag team against pairing of Viceroy, and just, basically throw him off the Hell in a Cell 16.5 feet into the announcer's table, metaphorically. I mean, stock goes up, stock goes down. I agree with that, Jordan. And the one thing Viceroy is good at seems to be social media and optics and messaging. Like, they're really good at getting the word out on Twitter. Better than I am. I mean, I can't seem to get enough Twitter followers to do much of anything. So yeah, yep, yeah. Peachy, I also like to sell the bottom. It's for me. It's like there were things I liked. For example, it seems like Steward is going to be held to some kind of milestones from now on. Like, I think that accountability is long overdue with that. Yet the ongoing support in exchange for those milestones, it's like, how much of a lifeline are you going to give to Steward? I get that it's their biggest tenant. But they did talk about wanting to re-tenant some of the hospitals to reduce their exposure. So that's part of the plan. So I guess I'm lukewarm on that. Like, I think it's okay. It could be better. Everything that wasn't Steward or Prospect seems to be doing really well. It's just the fact that Steward's the biggest tenant and doing the worst is kind of like, ugh. I mean, oh dang, it's up to 383. Let's go. Got my moon boots ready. I mean, I'm not banning anybody unless, I mean, someone would have to do something really egregious for me to do the ban hammer, considering my own behavior. But you know what's really funny? Okay, so the recommendation trends of analysts. So you've got some buys and holds, buys and holds, buys and holds. As the stock price drops, you get more sell ratings, and it's like, I wonder if analysts just change their targets and whatever based on what happened to the stock price. Yeah, I'm convinced more and more that analysts are just a bunch of clowns. I mean, I liked some of the questions that the analysts were asking at the end of the call. I think this round of questions from analysts was probably a little bit better than what we had at the last earnings. It was October, November, whatever. I can't recall the exact date of the last conference call, but it was last fall sometime. And I don't know, I remember being kind of disappointed that the analysts didn't ask any of like the obvious questions, or at least that's how it seemed to me at the time. Yeah, Kathy Wood is an analyst, right? And she analyzes how to put all our money into Roku and Tesla. Good move, Kathy. And I think she said something about Bitcoin's going to be $100,000 or something. And it's like, based on what? Oh, based on the fact it's going to go up a lot. Yeah, that's pretty much what any crypto analysis boils down to, right? It's going to go up a lot because it's going to go up a lot. It's circular. That, by the way, guys, that's called circular reasoning. It's going to go up a lot because of supply and demand. It's like, but why? Obviously, anytime the price of anything goes up, it's because of supply and demand. So saying it's going to go up because of supply and demand is circular reasoning, and it's stupid and it's nonsense. It's just been a while since I've trashed on crypto, so somebody brought up Kathy Wood. I don't know. Seems like there's a link there, like a similar kind of brain worms or whatever contribute to that sort of thinking. So you are a former buyer of ARK, huh? ARK with 2 Ks. So, no, Paul isn't technically an analyst. He's a self-described value investor, and it's not that he used specifically his brother's money. I think their family's money is all sort of combined at their holding company Crossroads Group, and Paul was in charge of like the stock portfolio on behalf of like the whole family and all of their combined wealth. Yeah, he's the LeBron, right? And I guess they like agreed that like, you know, his brother was upset about the money that was being lost on the Nvidia short, and he like I guess agreed that to close the short and to pay back the money himself. And now his brother manages his own piece of that fund, if that makes sense. But they also own 8 or 9 businesses upstairs and like 1,000 apartments or something. So it's okay that he shorted Nvidia. Which, by the way, like, one very good reason not to short Nvidia is, well, Nancy Pelosi bought call options or something, and it's like, she's actually one of the most successful stock traders that exists. So if you clone Nancy Pelosi and inverse Kramer, you should do quite well. So that YouTuber would need to know how much Paul shorted the stock. And did he short it, or did he synthetically short it using options? Because I don't think he got that granular about the nature of his short position. And depending on what method you use, like, yes, just directly selling shares short is what we think of, but there's other ways to short a stock. He did naked calls. Was it just one? Was it just one, or how many? How many at what strike? I think that's relevant. Yeah, then we would need to know how many and at what strike to be able to calculate his loss, wouldn't we? Yeah. So if anyone's curious what I would do for Nvidia, one, I wouldn't make a directional bet. I would actually bet on Nvidia's price to be volatile and buy a strangle, probably. Okay. Yeah, that's, granted, yeah, I don't even think Nvidia's worth like 200. So, I mean, it may be different now, but like, I actually agree with him on the valuation, probably, which is the funny thing. I just think he essentially, for lack of a better term, went full retard by shorting a stock that has that much enthusiasm. Because you can't, like, time in the market beats time in the market. Exactly. You can't predict when people are going to get a reality check about that valuation. You can guess that it will happen eventually, but at what cost in the meantime? Is that the best opportunity? So, like, yeah. When there's plenty of undervalues, like if you're a value investor, there's plenty of undervalued stocks for you to just put your money into and wait for them to go up and, collect your dividend or whatever in the meanwhile, right? So, Chris, no. So the dividend, nothing definitive was stated about the dividend, just that the board will, do their usual thing where they'll meet and announce with regards to the dividend at the usual time. No, Nvidia itself isn't a bad business. It's one that, at the right price, I would be interested. But I think there's been a disconnect between where it's been and what the right price is for a while, and I don't think that's changed. Yeah, I generally don't like, honestly, I don't think selling shares short, like I don't ever really see where that's like a particularly good idea, to be honest. I think there's almost always a better way to make money out there than that. Yeah, I mean, Meat Kevin has the IQ of a potato, though. So, like, I don't know. I mean, it might just, I mean, maybe he's not that stupid, but his head just seems so far up his own ass all the time. Like, I'm a YouTuber that made a lot of money on Tesla stock, so I'm gonna run for governor, and then I'm gonna get a DUI that gets thrown out because of, funnily enough, I think got thrown out because of people that don't like him writing too many letters to the judge or something. There was some weird thing about his DUI getting thrown out. Did anybody see that absolutely cringe video, by the way, where Kevin, like, to prove that he wasn't an alcoholic or something, took a couple shots on stream and like did a breathalyzer on himself or something to prove that he doesn't have a drinking problem or something? That was some cringe stuff. You think NVIDIA is going to diversify into cloud services? I mean, maybe. They can diversify into whatever they want, I guess. Oh, Chuck Carnevale from Fast Graphs, huh? Yeah. Well, all right. So the funny thing about, all right, so drinking for his anxiety, that's self-medicating with alcohol. That means you have a problem. Like, I doubt that his therapist prescribed him like 4 shots of vodka a night as a anxiety treatment, right? So yeah, that in and of itself tells me the dude's got a problem. And I don't have any like moral hang-ups about people doing pretty much whatever they want with their own bodies. I'll joke I'll joke a little bit here and there about certain things, but literally I think everybody should be allowed to just do whatever. The problem is, like, if you operate a motor vehicle while doing so, well, your rights generally they should. The philosophy on that is that they should end at the point in which they jeopardize somebody else's rights, and the most basic right is the right to live and have like a relative sense of physical safety, and you violate that when you consume substances and operate motor vehicles, immediately afterwards. Yeah, I mean, if it's just your own, if it comes to your own personal bodily autonomy, yeah, you should pretty much. I'm in favor of as few limitations on your personal autonomy as reasonably possible for an orderly society to exist. But yeah, back to Chuck Carnival from Fastcraft. So yeah, he's one of the very few YouTubers that makes any positive MPW videos. Joseph Hogue is another one, and I'm another one. I think I was making them first, though. To be fair, I was doing it before it was cool. Yeah, as long as it doesn't, well, as long as it doesn't affect others in a way that's like directly detrimental to their physical safety, right? Like obviously, if any damage you do to yourself will have like an emotional impact on people that love you, or possibly a negative financial impact on, like, if you have health insurance, your health insurance provider, or whatever you might, or if you're old and on Medicare, the taxpayer, but you paid in to that same system your whole working life, and so I think that's probably about a wash. Yeah. So yeah, 100%. I'm definitely in favor of fair criticism for companies, even if I invest in them. Like if there's something that I think they could be doing better, I'll definitely say it. Like Intel, about 13 or so months ago, a little over a year ago, they said they were committed to a strong competitive dividend, and which made people think, oh, they're not going to cut the dividend, and then like a month later they cut the dividend. I felt like that was that was like a gaffe. That was poor communication, and probably that disconnect between the message and then the action afterwards, I think made the stock drop maybe a little more than it otherwise would have, and kind of irritated me at the time. As at the time I was kind of a bag holder. I'm actually doing really well on my Intel right now, but it didn't make me sell. It mildly irritated me. But anyway, back to who's positive on it on YouTube and who's negative. Now I don't have a financial background at all, but Chuck, I guess, was a finance professional at some point. That's, at least I read that somewhere. And Joseph Hogue is a CFA. So it's interesting that out of the people that are positive, I mean, as far as I know, we're the only 3 people on YouTube that are like overtly pretty positive on MPW. 2 out of the 3 have finance backgrounds, and I think all the people saying it's trash and then sell it and avoid it and whatever, for the most part, I don't think have really, don't have any position in it, either short or long, so don't really have any skin in the game to motivate them to really look beneath the surface anyway. But 2 don't really have any kind of credentials as far as I'm aware. So yeah, it's funny because I'm not that granular about the technology and stuff. I know Intel is definitely focused on the 5 nodes in 4 years and all that stuff, and their foundry business. And I think there is something to be said for being, as far as I'm aware, the only fully vertically integrated chip maker on the planet, and they're US based. So you don't have the same geopolitical risk as with Taiwan Semi. I don't know. I like Intel. Yeah, I mean, I've thought it was starting to look under. I mean, my first purchases were around the $10 mark, and I still thought it was a little bit undervalued at about 12, to be honest. And that's when I made my first video, because it had run back up from like 10 to about 12. And I still felt like, it seems still a little undervalued. And then, of course, the share price has not really performed for me since then. But there is a Peter Lynch story. I think it was the company was called Kaiser. If Jordan's still in chat, he'll correct me if I'm wrong about that. But he was buying it. The price dropped by like 80% or something, so he just bought more. And then when it recovered, what do you know? He made a huge return. It's dollar cost averaging. You keep, as long as you think it's undervalued, and you have some reasonable basis for that, you should just keep adding to the position. Kaiser Industries, yeah. Yeah. Well, and you're not going to get a debt-free REIT in all likelihood, so if you believe what the balance sheet says, more or less, then this is undervalued. So that's about all. Does anybody have any additional questions, MPW or otherwise? Why not? No, I work nights. Yeah, right. I've seen Chuck and his video about what to do when the price drops. So are those red flags or are they false flags? Because a lot of the negative research out there does come from questionable sources. Yeah, well, I'm not important enough to have a private jet yet, so I have time to so I don't think Steward's going to get bought out entirely. There's a division that Steward has, their managed care business, that MPW believes they can monetize by selling. And they also think that they can sell the operations of some of their facilities to other operators. MPW owns the master leases on those facilities, and if Steward can sell their operations to other operators, Steward gets cash and can pay MPW what they owe, and MPW gets a tenant that is maybe more reliable at paying their rent going forward. Oh, dang. We got ourselves a super. Heck yeah. Max with the $2 super. I think that's the first one I've ever gotten during a live, so I'm sorry I don't have a soundboard. I wanted to play like an air horn or something for that. I have a very low-tech setup here. All right. I mean, hey, I can almost buy another MPW share with that right there. Yeah, the next roaring kitty here. Deep effing value, my friends. Deep effing value. But for clarity, I am not a cat. Not a cat, just so you all know that. Do you guys think I should do more lives, just like individual for earnings and stuff like that on this channel? Oh dang! All right, we started a trend. We got ourselves another super from Mike. 201, Canadian A. So it's funny, we actually had a Canadian investor on the Cash Flow Kings live show, which I co-host with Ryan, and he was mentioning that Canadian banks have a lot of, a lot of potential upside, basically because the situation in Canada is like, I guess, like just a handful of banks basically just own the whole market, and there's just, it's like an oligopoly basically. As long as MPW doesn't go bankrupt, it's all safe to me. Hope governments step in if all goes bad. Hospitals need to close. So, yeah, I really, really strongly doubt that MPW is going to go bankrupt. Experts like our friend Dividend Dude say it's 50-50, for what it's worth. Though I'm just I don't think it's quite 50-50. I would put it probably somewhere around, I mean, this is just my sense of it, probably about 90% that they don't go bankrupt. And if they don't go bankrupt, then it is in fact undervalued because it's basically priced for bankruptcy. Like, let's be real, it doesn't fall from its highs down to like under $3 unless somebody's pricing it for bankruptcy. And so if it doesn't go bankrupt, it's almost certainly a value play, and I think about 90% certain that it's not going to go bankrupt. So yeah, I mean, that's granted. Yeah, if it did go bankrupt and go to zero, it would hurt, but it wouldn't take me out of the game either. So I'm not one to all in on anything. I'll make a pretty good sized bet on something I'm confident in, but I never bet the farm either, though. Yeah, the stock price, let's see, we still going up? Yep. All right, 6.25. Yeah, I mean, I think there are definitely probably some traders that are probably exiting around this. It seems to have some trouble getting much higher than what it is right this moment, because there's probably people like buying little dips and then making their exits and stuff. Traders ruin everything. If I had to go all in on one of them, that's really tough. So let me think out loud here. So MPW is probably the most undervalued of the three. Baba's the second most undervalued, but also the first or second most uncertain. Like, there's reasons to be worried about China, of course. I don't know if those concerns outweigh the MPW concerns. PayPal seems like the safest, but the least undervalued. Like, I don't see PayPal as being like 80% discounted or anything. I'd say, I mean, PayPal is probably a solid like 35-40% discounted from what it should be. I mean, it should probably be certainly over $75, maybe more depending on, how you view their future. Baba. I think Baba also, it's probably about 50% off of what it should be. Like, I think Baba certainly should be over 100, maybe over 120. Well, I mean, that's what they needed the private jet for, all those trips to Finland to do their due diligence, man. Come on. I mean, and what is the, like, and that also, like, I guess, like, what is it about them being from Alabama means they can't intelligently invest in hospital real estate in Finland if they're experts in hospital real estate generally? As long as they understand how hospital operations work and the differences in the regulations in Finland versus the US, I mean, they understand, like, in the US, there's 50 different states with 56 different sets of regulations. If they can navigate that, why not Finland? It seems like, I don't know. Like, I don't know how you're connecting those things logically. Like, if you could help me out with that. Don't ask me about algorithms, bro. I'm just a guy that likes tank tops. The state steps in if it gets out of hand. I'm not sure in what context you mean. Like, which state, and what do you mean by out of hand? A bailout. I mean, maybe like Massachusetts, they that's what I was thinking with Steward in Massachusetts, because there's a couple hospitals they have there that, like, if they closed, it would overwhelm all the other hospitals in the area, and it seemed like the congressional delegation or whoever wrote that letter to Stewart seemed like they were crapping their pants over the prospect of I think it was the one in Brockton. I forget what it's called. They were really worried about that acute care hospital closing. Yeah. So does that mean, I don't know if that means like a bailout directly, but remember what they said on the earnings call about how the eastern states have a lot more regulatory red tape about switching operators and whatnot. Yeah, I would 100% testify to Congress in a tank top, because they would need to know and receive the message that I'm not a low T. Yeah. But no, the essential care thing, I don't think they would do a direct like monetary bailout, but what I do think they would do is maybe help ease up the red tape about switching operators to keep the hospital open, because in the earnings call they mentioned specifically East Coast regulatory environment, making it more of a long process to switch operators and hospitals. Yeah, I mean, guys, in the chat right now, which congressmen and senators do you think I could beat in a UFC mixed martial arts match? Cool. Are there any that you think would be willing to do a Hell in a Cell with me on WWE? Uh-huh. Can you imagine? Pelosi, like, getting the gloves and giving me what for. I mean, I think AOC is pretty tall. She might have reach on me. Like, I'm jacked, but I'm short. So, like, I'd have to get that one to the ground. No, I don't mean that in a dirty way. What are you guys thinking? Oh, gosh, what's his Crenshaw, Dan Crenshaw. I mean, the thing of it is, he's missing an eye, so he's got no depth perception. I mean, my vision's pretty bad too, but I at least have both eyes still. And plus, I think being in Congress for so many years has made him soft. All right. If you could have any two Congress people / senators go toe to toe in the ring, which two? Like against each other, not me. Dude, Bernie versus McConnell, that would be based, bro. So Tattooed Chef already went bankrupt. So like you could argue like, well, can't possibly get any lower than bankrupt. But no, well, why don't we? The thing is, I hate these as investments. So, All right, so Roku apparently, no, they have free cash flow. Okay. But still gap negative. I mean, Neo's probably worse, but may have more growth potential than Roku, maybe. I guess Roku. Roku Magoku. Maybe it'll go Super Saiyan 3 for me. Rex, can I quickly synopsize the earnings call? So Steward is still not doing great, but any future support is being tied strictly to milestones that Steward has to meet. And there's one of Steward's other lenders that's not MPW is also like helping with that process. So it's not literally just MPW supporting Steward from here on out, from what I understand of it. And they said that they were confident that Steward would be paying full rent again by June. And everything that's not Steward or Prospect is doing quite well, which makes sense. Nobody was worried about any of the other ones. And they're pretty confident that their asset sales will be at favorable valuations and that they'll be able to raise the $2 billion they need to get through the next round of debt that comes due in 2025. 2024 debt is all taken care of. There's no debt maturing this year. So everything they're doing right now is just focused on getting the liquidity together to settle any debt maturing in 2025. And they've got some pending transactions that are going to get them about 25% of the way there right now. and they got talks and negotiations happening on the rest, from what I understand. And again, they said that now the valuations on what they've already got in the pipeline are good, and they said that the talks that they've got going for the other stuff all kind of in that same ballpark valuation wise, which again, quite good. And I think it shows that the balance sheet is basically, still like kind of pretty fair as an estimate as far as like the value of their assets. That's kind of my takeaway. Though there were some write-downs related to Steward, and that'll be reflected. So BTG. I don't know what's BTG. B2Gold. I don't know, man. Gold producer with 3 mines in Mali, the Philippines, maybe. Hey, I'm going to the Philippines soon. Do you want me to like see if I can get out to one of their mines and do some due diligence for you? We are focused on garbage companies. The reason want to be rich fast. I don't know. I mean, it seems like I'm not getting rich all that fast on my MPW stock. So, I mean, that's great that it's a dividend stock. I mean, I have like a 50 stock thing on M1 Finance that I put together basically thinking, I bet I can beat SCHG just picking 50 stocks myself instead of the 100 that SCHG does. And gold, ticker gold, Barrick Gold, another much larger gold mining company is in there. So I agree in principle with the idea of having some basic materials stocks, basically because I think as time goes on and the world gets more industrialized, I mean, gold has applications beyond just like being shiny and jewelry now, right? It's used in a lot of high-end electronics and that kind of thing. So I think it's safe to say that as the world gets more developed technologically, that driver of demand for the metal will probably go up in the very, very long term, like decades and decades. So it's probably an okay idea to have some gold producers. I also have Vale and Rio Tinto in different portfolios as iron ore, nickel, and things like that. I think also have that potential upside in the very long term. I try to buy when the valuations are low, though. Like the commodity price, the underlying commodity crashes, the companies that mine that commodity also crash. You buy those trenches in the price and then just sit on them. That's my strategy anyway. Albemarle, that's lithium, right? I don't have any Albemarle yet, but I see the vision with lithium as well because of batteries. Unless somebody comes up with a different a different material for batteries. Yeah, I mean, it's an okay dividend situation. Yeah, it seems like the only thing is like, yeah, they're gonna have some vulnerability to the like payout ratio 61. So like, yeah, if the price of gold fell in half, theoretically their payout ratio would be over 100, right? So yeah, that's a concern. Not that I think the price of gold's gonna fall in half or anything, but I mean, there have been these weird downtimes in the price of gold before. All right, any last questions? Because like, I've got things I'm gonna need to do this afternoon. So Newmont. Yeah. I think people have been talking about this on Discord. Yeah, I think people have been wanting me to say something about this stock. Copper, silver, zinc, lead. I only know the average land speed of John Perring's mom's swallow. But it's very laden. So basically, I just called Fraser Perring's mom fat and said she swallows. In case anybody didn't get the subtlety. And that's what I think of short sellers on MPW. SSRM. How come it's all mining stocks right now? Like, I haven't heard of half of these companies, right? Like, the only mining companies I currently have any stake in whatsoever, Barrick Gold, Vale, and Rio Tinto. I would consider any of these others, but I haven't specifically really closely looked at any of them. I mean, I have 100 shares of BABA, and I certainly think it's grossly undervalued. And the negative sentiment around it, look, it's up 3%. Sweet. Near as I can tell, it's bad because China, and that's about the extent of the argument. And I don't think because China is a good enough reason for it to be this cheap, and so, yeah. I mean, yeah, the revenue growth, yeah, definitely slowing down, right? But I think it's also important to recognize, okay, COVID was probably a benefit to their revenue growth, right? In a lot of ways that it was a benefit to a lot of other companies. And then they never had really a revenue pullback after that revenue surge they got from the pandemic. They had a flattening, but not a pullback. I don't know. I think that Alibaba is a pretty strong business. Yeah, a lot of companies that had a revenue run up during COVID had a big pullback after. I mean, regrettably, I bought Walgreens, and that happened to them, and the share price collapsed as a result. But the companies that didn't have a pullback like that, you would think people would be like, oh, okay, they got a big windfall during this time, and still kept growing, although at a slower rate. Yeah, I mean, yeah, there's competition, but yet they still grow. And by the way, I mean, do we think that a business that's got a wide moat like Baba, or at least that's Morningstar says it has a wide moat, that's not just me, that's still growing, and an 8.9 price to free cash flow, Really? Okay. If you say so. I just think that it's like how? I'm glad they're buying back shares though. At the end of the day. And I think they're accelerating this now. But now's a great time for them to do buybacks because they're a cash flow machine. And yeah, there's peaks and valleys, right? But a lot like PayPal, they are a free cash flow machine. And the market doesn't seem to care that they produce a lot of free cash flow and that their revenue is growing. It's just, well, it's slower now. Yeah, it is. I don't like there's no company that will perpetually have with no slowdowns and no backslides whatsoever, just constantly have extremely high growth while never having any plateaus or anything. And there's no company that beats every single time. Not over a really, really long time, like decades. And I think when people start to just expect that the growth has to be stellar every single quarter and they have to beat every single quarter on top and bottom line, and the growth has to be amazing every quarter and guided for even more the year after, the quarter after that, the year after that, whatever. Otherwise, it's a dead and dying shitty business. I disagree. But if it does do that, where they beat expectations and they got it high, then you can pay 1,000 PE and it doesn't matter. But if they're only growing modestly and they guide reasonably, sell it off. It's a cigar butt. It's a falling knife. It sucks. But the average person isn't so rational. So, like, heck, if there was like some kind of local business just operating here, producing cash flow really well, you might pay 4 or 5 times for just like a standalone small business to fully acquire it if it was consistent and everything. But Baba, a huge growing publicly traded company, less than 9 times its free cash flow. I mean, seems like a steal to me. But China, remember, be worried about China. And hey, yeah, like maybe there is something to that, and maybe I should be worried about China. But I think I have more chances that my price recovers and they keep doing well and I make a good return. I think that chance is higher than the chance that they become worthless because China. Maybe. Well, Emil, claims of beating the S&P 500. There are days where I beat the S&P 500, and there are days where I don't. And I mean, in 2022, I actually held flat when the S&P 500 was down like 20%, so I beat it that year. I did worse in 2023. 2024 has yet to be written. Does that really matter day to day, week to week, month to month, year to year? No. What'll prove if I beat the S&P 500 or not will be where I'm at probably like 25 years from now if I'm still alive. And by the time we find out if I was right or not, I'll be, elderly. Well, my value portfolio has only been in existence since 2022. So do we think a 2-year performance roughly is that meaningful in the grand scheme of things? That's like, I could restart a new portfolio tomorrow and then just start only showing that. And if that beats the S&P 500, am I a genius stock picker? Because you can cherry pick the time frame anytime you want. Like a lot of the other YouTubers, like, I mean, right, exactly. So I always preach that short time frames of a year, 2 years, even 3 years don't matter all that much, especially if I'm allocating into something that's going down a lot in that particular time frame. Like I'm gonna have, especially the first few years, what looks like grotesque underperformance, right? But if you look at the very, very first value investment I made, which was Intel, I got called all kinds of names because I initiated when it was in the mid to high 40s and kept averaging down all the way to the bottom. And now I'm up pretty well on Intel. And no longer does anybody say that that was like a big blunder or anything. I still think it's undervalued today, but it's my top position, so I don't really feel the need to add to it. So the problem is that, last year I saw a similar opportunity with MPW, and, well, we're still in the red stages of that, the averaging down stages. So, yeah. Overall, yeah, I'm sure I look pretty bad, especially for 2023. INVE-B. Just remember, everybody, there's I don't know. I'm not finding it. So is it this? Because there's no B. It's INVE, but there's no B. Is this the right company? I don't. The problem is there's how many tickers out there? Thousands. I cannot possibly have an informed opinion on every single one. Yeah. So I don't know. Like, for whatever reason, it doesn't come up. Is it a stock or is it an ETF or something? Investor AB Class B. Swedish investment holding company. That might be why it didn't come up on stock analysis. Maybe something about it being a Swedish company. Wow. I didn't realize Sweden had any market caps that high. So are you Swedish then? Yeah. Yeah, maybe if it doesn't have a U.S. New York Stock Exchange ticker, it won't show up on stock analysis probably. So, yeah, I mean, I'd need to find a data feed that would show me historicals and stuff on this, and probably, well, can I even find the 10Qs in English? I mean, maybe it is. Maybe it is. I mean, I will say this, like, it looks, the PE looks low. Like, it could be undervalued. Gosh, my value portfolio is a Schwab account. I have an M1 account. Not much in there. It's the M1 account. I actually, every time I hit another 1,000 subscribers, I let you guys pick a stock. I have to buy $1,000 of it. like you guys get to vote on it and everything. So yeah, Emil, your Swedish stock there. I mean, it looks. I mean, I wasn't aware this even existed, but if everything else looks good with it, like a 6 PE is very cheap. I'd be curious about why it's so cheap, and it might just be that maybe people outside Sweden haven't heard of it. But like, it's a big market cap. I don't know. Well, I don't know. Is this market cap in what is it, Swedish kroners or something? Is that the currency, or is it in dollars? I guess that's the question. I don't know how much this is worth in freedom currency. So it's it's like a Berkshire type thing. Like they own a lot of other, like they're basically a holding company. Then it's not, they don't have like an operation type thing. Yeah, okay, gotcha. Yeah, yeah. And honestly, the accounting rules on that, where they have to count like gains or losses even if unrealized on the income statement or whatever, it's seems stupid. Like Warren Buffett doesn't like it either, but makes it harder to look. But yeah, I mean they could be great. I've never looked at them before, so I can't give you an informed opinion. But yeah, I use M1, Schwab. I have a Robinhood account too and a Vanguard account. I kind of want to collect them all. I'm funny that way. I want to actually try every brokerage, at least every major one that I can at some point, and do like reviews on each. But I think a review of a brokerage is only meaningful if I can compare it to all the other brokerages, and also maybe like a tier list of each brokerage, like S tier, A tier, B tier, C tier, yada yada. I think that would be fun video. So it'll be good content. So I have many brokerages. I know who Sam Sulek is. I don't know him personally. I know he's very swole. I know his quad and hamstring would feed a family of 4 for a month in Japan, according to him. Yeah, I don't know about the 25-second ads. I wonder how much. I wonder what we'll do on this video, but. Finland. I mean, I know some people in Finland. I'm kind of an international sort of guy, you know? Jeff Nipple? Yeah, I know Jeff Nipple. To be honest, though, like the Natty for Life types in fitness YouTube bore the shit out of me. Just to be honest with you. I prefer seeing the guys that are cranked out of their mind on all the enhancements. So yes, Ryan, it is in fact true that you can hear domestic violence happening downstairs if you catch my streams at nighttime. And just before anybody judges, like I have called the cops before about it, and like at this point, like I think I've done my part, and it's like, what else can you do? All right, I clicked max and yeah. 1100% all time. Sweet. Now do that for Apple and it'll be like 50,000% or something all time. It's crazy. But yeah, I mean, this could be a great company, but yeah, I have no idea. Technology company. Somebody was saying cybersecurity is probably the future because of how many hackings and data breaches and whatnot are going on. I mean, that's a really general. All right, Emil, we get it. You like that stock, okay? One stick for life. No, stock. How do you feel about Class A and Class B shares that some stocks offer? So a lot of the time, the Class A versus Class B stuff, it has to do with voter, voting capability. And honestly, as long as like the Class B shareholders aren't like screwed over, which it would be, in most instances I could think of, it would be like hella illegal for them to like to screw over the Class B shareholders just because they don't have voting rights. So I don't care that much in most cases. Like, do I think Berkshire, like, do I think like Warren Buffett and Charlie Munger, God rest his soul, are going to like conspire to like, I don't know, somehow screw over the Class B shareholders because they don't have the same voting rights? No. And kind of the same with Paramount. The 77% or whatever of the voting shares are held by one entity. Now, whether or not Paramount is well managed is like a completely different argument, but are they conspiring to destroy shareholder value for the Class B shareholders specifically? I don't think so, because I don't think Berkshire would have bought those shares in the first place if they thought that was a possibility. Though they have started selling the position and the share price has collapsed because the Berkshire copiers are now afraid and exiting. Oh well. QQQ. Yeah, I wouldn't buy the QQQ. It's all tech and it's just 100. No. What can I say? I like picking my stocks. I would consider an options strategy on something like QQQ. Just, with like a little bit of playing around money. I 100% would never YOLO all in into any kind of options or even get anywhere near that. I think options have a place, but I don't think they are I don't think they should be the main focus. Isn't that one of those leveraged ETFs? By the way, the reason I won't buy like an options ETF, like a covered call ETF or whatever, like QILD or whatever, if I want to do something with options, I'll do it my damn self. Oh, yeah. Oh, so it's a yield max that follows the QQQ. Yeah. Like, if I want to do something with options, I will do it my damn self. I don't need some fund manager charging me a fee to do it for me. That's stupid. Like, what is yield max? What is the expense ratio on yield max ETFs anyway? What are they charging? Because whatever it is, it's an effing ripoff. People are paying 1% for yield max to just write the option. Like, oh my gosh, that is so dumb. That is so dumb. Like, even if yield max was generating a decent total return, you're giving up a huge even if it was slightly beating the market, you would probably not be if you're paying a 1% expense ratio. Yeah, that's terrible. That's absolutely terrible. That's like mutual fund level fee robbery. Yeah, it's absolutely awful. That's grotesque. Should we launch our own version of yield max that only charges 0.5% to put them under? The thing is, like, it's not really difficult because they probably just follow a preset set of rules and guidelines for like what strike prices and dates and stuff that they set for their options. So it's not as though they're like sitting there making tough choices day in and day out to get the best yield. They probably just have like a set formula or something they use. Rob Peter to pay Paul. JetQ, huh? NVIDIA crash or not? The only thing I would say about NVIDIA is it's likely to be volatile. I would not choose a direction on NVIDIA. That's just asking to get burned. The only strategy I would consider on NVIDIA is probably something that plays both ends, like buying a strangle, where any big price movement one way or the other profits for you. You're basically just betting on it to move really far in either direction. Now, if you just pick a direction, you would get a much higher gain if you're right, but I would rather just bet on the fact that it's going to move a lot if I was going to do anything with it, which I'm not planning on it, by the way. I was just being hypothetical there, and I wouldn't suggest anybody to do that if they don't understand how it works. For fire people that don't understand the stock market, probably, yeah. Probably. Yeah, so I think what a lot of them do is they buy the yield max, they drip, and so a lot of that premium that's getting paid them is going right back in to yield max, which they then pay more fees on. It's like yield max looks to me like it was basically just put together to farm that 1% as long as they possibly can, and nothing else. I don't see how it provides any value to the shareholders. 3M. Oh gosh. So I have a little bit of 3M. Actually, early on in the channel, I did a handful of occasions where I let people choose, like, vote on stocks for me to buy. So y'all made me buy 3M at some point, and I still hold it. Like, I don't sell any of those stocks. We're going to do this experiment as long as it takes, over 5, 10, 15, 20 years, however long I'm alive and on YouTube, to see if the stocks that my audience makes me buy will beat, like, Jeremy Lefebvre or whatever, assuming that we can actually see his total returns, which, I mean, the dude is now, like, he scrapped it seems like a lot of his previous investments, like Tattoo Chef, etc. And he's basically starting from square one and now bragging about his returns on all the stocks he just bought that are up. But if you look at like the all-time what he lost on a bunch of the other clown shit that he bought, he's not up at all. And it's like, it's just, and that's why I said earlier about like, hey, like I could just start a new portfolio and like reset, you know, my all-time performance by starting from square one again. So, but I'm not doing that. I'm just saying like, asking like if I'm beating the S&P 500, it's like over what time frame, right? Because if you look at Jeremy's new current portfolio, it's beating the S&P 500, but it doesn't count the losses that he sold out of, right? So Vinci's probably like a pretty good REIT. I mean, that Vegas real estate is pretty attractive, but I do think there's something to be said for the fact that like it's not risk-free, right? Like they exist because casino operators went bankrupt and their real estate got spun off into Vici, right? So now they exist and lease that real estate to those same casinos, and you know, we've seen multiple instances where casinos can go bust. Now, if they do, will somebody else want to operate that facility on the Vegas Strip? Probably. But could the tenants that occupy the real estate on the Vegas Strip experience tough times during a recession where tourism is maybe down and not as many people are going to Vegas, not as many people are staying in the hotels, not as many people are blowing thousands of dollars at the blackjack tables or whatever? Yeah, I mean, it's not risk-free. Just like MPW isn't, even though their real estate is essential community healthcare, doesn't mean that bad things can't happen financially. So, yeah. But overall, yeah, I mean, it's attractive real estate that Vici has, and in the long run, they will probably be pretty decent. So yeah, 3M. So here's the problem with 3M. And why, like, even though it's cheap, I'm not necessarily adding more, right? So why? So this is something that they're just doing just to keep the dividend aristocrat thing intact, right? Because this isn't real growth. This is, we're giving you fractions of a penny just so that we don't let the streak die. That's stupid. But, okay, so their free cash flow on a trailing 12-month basis. So I think we can safely say it's usually between 5 and 6 billion. Like we have a couple outliers here of where it was over 7, but I think 5 or 6. I mean, we can call it 6 billion in free cash flow. The net incomes, we can't really look at the net income because of all they took the losses from their lawsuits, like kind of in like a couple giant swaths there, so it goes negative. But basically, so they realized the accounting loss for the lawsuits already, so it won't be reflected in their net income going forward, but they still have to pay the cash over a period of years, right? Now, it's like, what is it? Is it 13 billion over like 18 years or something like that? I might have that switched. It might be 18 billion over 13 years. But at the time when that kind of came out, I did the math. And so their dividend, $6.04 a share. Okay, their free cash flow, about $9 a share, maybe 10 or 11 bucks, right? Maybe that's a more normalized number that they'll get back to. But either way, between, call it 60 and 70% of their free cash flow, somewhere, kind of in that ballpark, is getting paid on the dividend. The majority of the rest of that free cash flow is going to have to go towards those payments on those lawsuit settlements for the earplugs and whatnot, and the forever chemicals and stuff. So that's it. Like, there's not anything left over to do buybacks, even though the stock price is cheap. Okay, I will give it that. All right, price to free cash flow less than 10. By the way, Baba's cheaper and doesn't have a lot of the problems that 3M has. Just China, just saying. Doesn't have, as far as I know, Baba's not filled with debt on their balance sheet or anything like that. In fact, I think Baba has one of the cleanest balance sheets out there. But 3M, we've got some long-term debt, which it's kind of been decreasing, but then again, they have to pay those lawsuits out over a period of years, and they don't have any free cash flow left to pay down extra on any debt they have to grow the business. I mean, they could issue shares to do an acquisition or something, but is that adding value to shareholders by diluting them? Probably not. They can't do buybacks, even though the stock price is pretty cheap, and that would probably be better than the dividend. But if they cut the dividend, the shareholders will riot and come out with pitchforks for the board, so they can't do that. So 3M is this company that's kind of stuck for the next few years, not really able to, I don't really see how they can just generate more value for a while. And what happens if it turns out that another product of theirs is harmful somehow, or some other chemical that they've been using is creating another environmental disaster, and they get sued again? Like, I don't know, just not in love with 3M at the moment. I hope that answered the question. In short, I'm not looking to add more 3M right now. And I think that kind of comes back to, just because the stock is cheap doesn't necessarily make it a value stock. At least not in my eyes. Yeah. Well, what's funny about so I've been following a lot of the YouTube finance stuff since well before I considered doing my own channel. And back in the day, Paul was all about having a higher discount rate, right? Because and I to this day still like using a higher discount rate in most cases, just to see, like, hey, what are my chances of getting an outsized return, something more than an average market return. The market's been returning more than average a lot of years over the last decade or so, but I don't count on that, and I don't aim for like 25% returns necessarily on individual stocks, although some could return that much feasibly. But it was like, oh, throw in like a 12% discount rate or something, because you want a little more juice for your squeeze. And nowadays, all the numbers are being run at 9% discount rates, and it's like, are you just changing it to a 9% so the stock you like shows up as a green on your calculator? Yeah, 10% is a perfectly, the Guru Focus calculator I usually show on camera because I just like the way it looks. I'm not saying it's better than any other calculator. for the way it looks like on screen, I happen to like it the most out of the free ones available. Their default is 10%, right? So some people use 9%. In fact, sometimes when I put in like my assumptions and stuff in there, and I throw in certain percents of discount rates, like if I throw in 10%, it might end up like at the mid analyst price target, and then if I throw in 9%, it'll be on the high one. So like it's clear to me, I think that the analysts that are using some type of DCF calculation, they're clearly using some kind of similar assumptions in that 9 or 10% range. But what I like to do in a lot of my own personal investments, where a DCF is an appropriate, where I think it's appropriate to use one, it's not for everything, but I like to, get in when I can where a stock is currently trading for a price that's cheaper than the price I get using a higher discount rate. Because, like, let's say the fair market value of that stock is what it comes out to on a 9 or a 10% discount rate, but I used a higher discount rate and the stock is still cheaper than that price. Well, then it means that if it ever comes back up to that, fair price at that 9 or 10% discount rate, I'm probably making a much, much higher return than what you would say is a market average. I'm probably making a lot more than 10% on that stock if it ever recovers to like a normalized valuation. But some stocks will just kind of languish for a ridiculously long time at cheaper valuations, and sometimes they just don't ever really come back up. But if they have the cash flow to back it up and they use buybacks and dividends and whatever, you can still get a really good return on those companies. Like, investors don't have to love the business and buy back in and drive back up the price for you to get a return necessarily. But suffice it to say, like, with the higher discount rate, you can afford then for the stock to stay kind of beaten up if you think 10% is fair, and you use a 12% and you get in cheaper than that. And you say, okay, even if this thing stays kind of beat up, I still probably will get an okay return. Assuming that your like growth rates and stuff like that are reasonable and realistic and actually happen, which there's a lot of room to make mistakes. I don't think anybody ever guesses the exact numbers dead on when you're trying to project like 10 years into the future. Mike, the first oh geez, I've been on this thing for 3 hours. Okay. Yeah, we talked about MPW a lot. If you need a summary, Steward's still kind of not doing great, but they think they'll be paying full rent again by June. Any future support is going to be tied to Steward hitting certain milestones and obligations, and so they're basically not going to get like unconditional financial support. And one of the other lenders that loans money to Steward is kind of like going halvesies with MPW on that deal. Everything that wasn't Steward or Prospect that's on normal accounting and whatever, they're all doing fine, it seems, from the call. They have transactions in the pipeline, it seems, to raise the liquidity they need to pay off their debts. Once again, 2024 debts all settled. That's kind of old news. 2025 debt maturities, they're anticipating that they'll have the funds in plenty of time for that. They have a target of raising $2 billion in liquidity, and they said they've already got the deal sealed on about a quarter of that, and they have stuff in the works on the rest. So seems like they're getting a head start on next year's debt maturities. Limited secured financing might be a part of it because a lot of their debt's actually unsecured. Don't know if you were aware of that. They did not definitively say one way or the other about the dividend. I've been getting that question pretty much all day here. If you had any other specific questions, feel free to either ask now or join on Discord. I think I'm about to call it, though, 1 minute warning. So give me what you got. Yeah, so I definitely don't think there was anything on the call to suggest that MPW is going to go bankrupt or anything like that. So yeah, I'm basically anything short of bankruptcy, like I think we're pretty decent shape. I'm certainly continuing to hold. I may even buy more in the near future. So overall, I'm pretty satisfied. It was like kind of a so-so call. It wasn't like, oh, hey, everything's, peachy and rosy and stuff, but it was, the Steward stuff, I think, was about how we expected it to be after the January update, and everything other than, Steward was kind of like the big kind of negative thing, and which they kind of have been for a minute, and most of the other stuff seemed like it was going well, to be honest. Yep, been an absolute pleasure, everybody. My Discord should be linked in the description if you guys want to keep talking there. I'm on there quite a lot, and a lot of other much heavier MPW shareholders than myself are in there, and we talk about other stocks too. This is not just an MPW channel, although we've been a little heavy MPW lately because of all the interest. So take care, everybody. Have a fantastic day.